Frank had budgeted his entire retirement down to the dollar. Fixed income, paid off house, a plan that worked, until one envelope arrived that didn't fit the plan at all. His homeowner's insurance renewal wasn't just higher, it was 41% higher than the year before, for a house that hadn't changed at all. This is a true-to-life composite case. Names and identifying details changed, based on a pattern showing up in mailboxes across the country far more than most people realize. Let's open the file. Let's call him Frank. 72 years old, retired for 7 years, living in the same 3-bedroom house he and his late wife bought decades earlier. His retirement income was fixed and carefully planned. Social Security, a small pension, modest savings stretched to last. Every dollar had a job to do. Insurance was one of the biggest, steadiest line items in that plan. For years, Frank's premium had crept up gently, a reasonable few percent most years, the kind of increase that barely registered. He never filed a claim. Never missed a payment. He assumed steady, responsible homeownership meant steady, predictable costs. Then this year's renewal came. Frank read the number twice, certain he'd misread it. He hadn't. $1,600 a year had become just over $2,200, seemingly overnight, with no clear explanation printed anywhere on the page. On a fixed income, $600 extra a year isn't an inconvenience. It's a real, tangible cut somewhere else. Groceries, medication copays, the small cushion Frank had counted on for emergencies. For a moment, he genuinely wondered if he could still afford to stay in the house he'd lived in for 30 years. Frank called his insurance company, expecting an explanation. What he got instead was a vague answer about regional rate adjustments and updated replacement cost estimates. Technically true, but not remotely specific enough to feel like a real answer. Here's what insurance companies rarely explain clearly, even when you ask directly. Premiums rise for several layered reasons, often stacked together. Rebuilding costs. The actual cost of materials and labor to reconstruct a home have risen sharply almost everywhere, and insurers adjust your coverage amount, and therefore your premium, to match. Regional risk factors shift too. More claims filed in your area for weather events, water damage, or wildfire risk can raise rates for everyone nearby, whether or not you personally filed anything. And in many states, your insurance credit-based score, a factor separate from your regular credit score, quietly influences your rate as well. None of this is really about Frank personally. He hadn't done anything differently. But insurance pricing works on pooled risk across a wide region, which means a completely blameless homeowner can absorb cost increases driven by factors miles away from their own front door. Frank's first instinct was to just pay it. What else could he do? He'd been with the same insurer for 18 years. Switching felt complicated, and complicated felt exhausting at 72. But his daughter, visiting that weekend, asked him a simple question. "Dad, have you ever actually called around?" He hadn't. That conversation was the turning point. Frank decided that before accepting a 41% increase without question, he'd at least spend a few hours seeing what his actual options were. Tactic 1. Get at least 3 real quotes from different insurers, using the same coverage amounts and deductible so you're comparing like for like. Frank had never done this in 18 years. When he finally did, one competitor came back nearly $500 a year lower for equivalent coverage. Tactic 2. Call your current insurer and ask, specifically, what discounts am I not currently receiving that I might qualify for? Frank discovered he'd never been enrolled in a claims-free discount he'd earned years ago, simply because nobody had proactively added it. Tactic 3. Consider raising your deductible if you have enough emergency savings to comfortably cover it. Moving from a $500 deductible to a $1,500 one lowered Frank's premium meaningfully, since he'd never filed a claim in decades and felt confident about the trade-off. Tactic 4. If your rebuilding cost estimate seems inflated, ask for a re-inspection or provide your own updated square footage and material details. Estimates are sometimes generated with broad regional averages rather than your home's actual specifics, and correcting that can lower your coverage amount and your premium without reducing real protection. Tactic 5. If an increase still feels unjustified after all of this, most states have a Department of Insurance where you can file a formal inquiry or complaint. It won't overturn a legitimate rate filing, but it does create a paper trail, and companies do track complaint volume. It's one more reason for them to review a case more carefully. Frank ended up switching insurers for a policy nearly $550 a year cheaper, with a slightly higher deductible he was genuinely comfortable with. He also learned, for the first time in 18 years, exactly what factors were driving his rate. Because this time, he asked, it wasn't a dramatic transformation. just a quieter, steadier version of the retirement Frank had originally planned for, with room again for the small cushion that mattered more to him than almost anything else. Frank's situation reflects a much wider trend. Home insurance premiums have risen substantially in many regions in recent years, yet the majority of homeowners renew automatically every year without comparing rates at all. Not from laziness, usually, but because nobody ever taught most of us that insurance is something you're allowed to negotiate and shop the same way you would a phone plan or a car loan. So here's what actually matters. Get real comparison quotes with matching coverage. Ask specifically what discounts you might be missing. Reconsider your deductible if your emergency savings allow it. Request a re-inspection if your rebuilding estimate seems off. And escalate to your state's Department of Insurance if something still feels genuinely wrong. None of it guarantees a lower bill. All of it puts real information back in your hands. This channel exists to read the fine print, so you don't have to find out the hard way. The vague explanations insurance companies give, and the concrete steps that actually work when you push back. If this helped, subscribing means the next case file lands in front of you before you need it, not after. Next time. The insurance discount almost nobody uses, and it takes less than 5 minutes to claim it. See you there.